You have entered into the black hole of real estate, a place for industry news, tips, and strategies. Once you enter into our vortex, even if you could leave, you're probably going to want to stick around. I'm your host, Ron Weiss-Sikarski, and you are now entering the black hole of real estate. Well, I'm excited to be back as we are midway through January and things are really starting to show themselves as far as what we can expect in 2021. We are still riding the wave of super low interest rates and all-time record lows, and there is definitely some help on the way for business owners with the second round of PPP being kicked off. There's also some news about Zillow and their new IDX procedures for putting properties on the website, and we think there's going to be an extension through the end of March on the rental and foreclosure moratoriums. So, the first thing we want to talk about is interest in property is at an all-time high, and inventory is at an all-time low. And rates for interest rates are at an all-time low. So, what does this mean? I believe that we are going to turn a corner of sorts. Rates, in my opinion, will begin to trickle up. Now, not dramatically, but I do think they'll trickle up. Let's face it. At some point, it's going to happen, and it certainly seems like we've hit the bottom of the trough on those interest rates. I'd expect gradual increases over the course of 2021. The inventory, I believe that a lot of homeowners paused the button on going on the market to sell their properties for reasons we're very familiar with, COVID and safety and spiking positive levels, but also the uncertainty of the political process and election that we saw through the last few months of the year. And really just trying to figure out where we are in the business sense. Will I have a job in 2021? Where can I move to? Where's the property that I want to move into if I sell my home, let's say, super quick? What we're now seeing is more inventory hitting the market. And yes, it's going under contract probably just as fast as coming on, but there is a renewed enthusiasm for selling homes because, let's face it, as a homeowner, you're likely to get as much or more as you would have received at any point in time in the history of this property, including the boom, 10, 15 years ago. So this is exciting for sellers. And they have equity in these properties, which was different than 10 or 12 years ago in a financial crisis where we had tons of property out there, but everybody's underwater. We have a lot of people with a lot of money they can cash in on and move on to the next property. Factoring in that most people move, let's say, every 8 to 10 years, we're in that sweet spot where inventory and movement should meet. So I do expect more inventory to be coming on the market. And as that happens, I believe that I won't say the floodgates will open, but there will be movement towards increased inventory as more jump on the bandwagon. If you're going to go on the market in the month of January, you probably have the best opportunity to get top dollar in just a few days on the market and really limit the amount of exposure in your home to allowing people in to take a look at it. And with the safety precautions that we've seen in the last year, it's relatively safe given the environment to do so. At least that's what we're seeing in the market, and that's what we're being told. And in practice, it's playing out that way. So when we look at where things stand, going forward, what does the market do? What's the inflection point? Where is this, shift towards more inventory going to take the most effect? Well, I believe Inauguration Day is going to be something that will kind of put the final piece of the puzzle together, because the certainty is there'll be a new president. And that'll be less to talk about. And tax season got pushed back to, I believe, February 15th. So a little bit slower start, but it's still due on April 15th. So not a lot of change there. As people get their taxes done, they know their exact financial opinion. Every year, somebody has to sell something for a tax reason or buy something for a tax reason. Those things are taking place. The money is lined up. The financials are going to be in order. We'll know exactly where we're going to be. And the uncertainty for the borrowing season for most people really revolves around that tax return. So these are all lining up for people that are getting ready to make their move in 2021 with lots of evidence in 2020 on how to do it safely. This is stacking up to possibly be a better year than 2020, which crushed 2019 somehow, some way. I think if someone wants to move, they're going to make that happen. And we saw strong evidence of it last year, hey, even with the vaccine on the way, and hopefully that all goes well. I'm really interested to see just what happens over the next few months. Would we have some record sales? It's possible. The things are lining up for that to happen. That would be exciting. If you have rental property, that moratorium on not getting paid in the rent, well, yeah, that's in the eviction notices and bans. It looks like March 31st is going to be your line in the sand, so hopefully you can make it through the next few months. And maybe you're fortunate that you've been receiving your rent all along, but that seems to be 90 more days of it, give or take. But March 31st seems to be where this is heading. Same thing with the foreclosure ban. So I don't expect any new REO business hitting the market possibly at all in 2021 by the time those things move through the process. So if you're waiting for a deal on a foreclosure, that could be a very long wait. And if you're living rent-free because of all of these things, then that may be coming to an end. And if you're a property owner, there should be a shift, but maybe not until April. I believe that most things will line up around tax day on April 15th, and hopefully that's a launching point towards a record summer of real estate sales. Sliding over to the business side, the second round of PPP loans are on the way. Around the 15th, the smaller banks were allowed to launch, and then the bigger banks around the 19th of January, and those applications are in place. And I hear that some people have already got their second round of PPP approved. The big kicker in this one, there's a lot more questions being asked, and you have to show a 25% loss in revenue year over year, measuring one of the 4 quarters. For most people, the second quarter of 2020 produced less revenue than the second quarter of 2019. That's where we're seeing the most activity as far as losses in revenue. There are some businesses that just crushed it last year, and they won't be able to apply for PPP this year. Last year, anybody could apply. Now there are certainly more caveats and restrictions, but all the early reports are the banking system is doing a lot better job this time around as far as the online portals not falling apart and multiple relaunchings of the same application to get that in. That seems to be a smoother process, so that's good for the business owners. Let's face it, if you're in the hospitality or restaurant, travel business, you may still need these to keep your business going. And I believe that was one of the better things the government set up, was to help small business stay in business. And I expect and anticipate that a lot of people will still qualify. And I got my fingers crossed for every business out there, even though we feel that we're on the way to some sort of a recovery. Things could change drastically. So I believe this is a good place for most small businesses to at least investigate. And let's face it, if you borrow the money and for some reason you don't need it, you can pay it back. There's no guarantee that the second round is actually going to be forgiven. But I have seen where they're looking at less than 1% interest payable back over the next 5 years. And let's face it, if you can get a business loan under 1% over 5 years, it could be a way to grow your business and reinvest. And I believe that's the power of the second round of PPP, is allowing small businesses to have some seed money to invest in growing their businesses and spreading those payments out over 5 years, practically interest-free. That is something that could jumpstart the economy or continue to propel it forward. And it's interesting to hear that the economy is a little bit off when the stock market is breaking new records once again. I'm not that deep into the financial analysis to help you explain that, but small businesses definitely has suffered and continues to suffer throughout the last year. Reasons behind the stock market surging forward like this, you would need somebody who understands that better than me to explain that to you. Hard to believe at times, but it's happening and playing out in real time. If there's one more thing I would talk about right now, is Zillow has had their dramatic shift from putting all the listings online, from all the syndication, from hundreds and hundreds, probably 600, 700, maybe 1,000 different MLSs and brokerages across the country, to now getting IDX feeds from the real estate boards. So it's no longer a matter of who controls the data and will you allow Zillow to put that on their website. They've joined all the MLSs. They have the IDX feeds, and they're mashing those things together. For many of the agents out there, they have found that their sales and reviews have disappeared. Zillow tells us that it's a glitch. They are announcing on places like Inman that it was a mistake, and they're working through that. And right now, there's definitely a little bit of angst because a lot of people were finding that as this transition was happening, this glitch has made all of their reviews disappear, or more importantly, all of their past sales, which are a big, big thing that people look for when they're shopping on Zillow, not to find a property and by association to find an agent. We're told that they're working feverishly to resolve that, and we'll take them at their word that it was just a glitch. But it certainly is impacting some people right now. The future of Zillow is along the brokerage line. And since they have that in place, it wouldn't be shocking to me to see a number of agents actually joining the Zillow brokerage. Redfin's been doing it for years. It seems like a natural move, and it's playing out, in a not so shocking way. It really seems to be the path it's heading on. But right now, the transition is, I believe that Zillow still likes to receive that money from the agents, and they've got a couple of partner programs, all of which involve Zillow being Zillow as a portal and a place for people to search properties and identify them, and then connect with the right agents. So I believe that's what 2021 looks like. And I don't know anybody there. I'm not in those board meetings, but I'd be shocked if they pulled the plug on their past business that quickly. I believe they'll let it play out. There's a lot of revenue that they're making off of the agents and the marketing advertisements. I'd be hard pressed to believe they're going to yank that out all at once. I think over time you'll see it, but they may be a hybrid for many years to come. No one knows for sure. I mean, what do we know for sure at anything in 2021? It's uncertainty really is the norm. So as far as the real estate space, I'm optimistic. And I do believe that this market will do well despite the low inventory that we've been saddled with for I don't know, a few years right now. New construction is surging ahead. Timelines are increasing to actually get the properties that you want. And there is some initiative towards new construction / affordable housing. I'm interested to see how that plays out. They may be overly optimistic in the hopes that that's going to happen in 2021. It seems like a longer term strategy, and it's hard for me to believe that when developers are putting up properties $300,000, $400,000, $500,000, why they would suddenly want to shift that down into lower price points. So there is likely to be some incentives to get them to do that, and this is what I want to see play out in real time over the next 6 months. Is what incentives are out there for for-profit businesses and construction companies to actually, make less. We'll see how this plays out. Glad you guys joined us today, and I look forward to following up on the things we're talking about today. This is Ron Wysokarski for the Black Hole of Real Estate.